I have 1 minute to look for my volume rules. Where are they? Who has my volume rules? Does anybody have my volume rules saved somewhere? Any triangle. Come on, volume rules.
Stop your whining, dog.
Oh, and word of warning, if one of those people come in and call us names, let's see if they can get my race correct this time. Jesus. Right? Come on, man. Come on, man. This is a good rule, but I don't know where the picture went. Okay, we'll start in just a minute here, all right? Class is going to flow really quick because I assume that we've all done our homework. But I would like to post these rules here. Damn it, where are they? I did too many freaking Bloom plays. All right. Okay, you know what? Screw it. I will replace those volume rules with this one. This lesson, okay? All right. Okay, so everybody can hear me okay? Everyone from the trading floor is in the room. The recording, JC, the recording is on now?
Recording's on.
Okay, recording's on. Everybody's here. Okay, so this is, let's go over the schedule really quick here. So just click on that schedule here up top. Okay, so this is actually, we are actually supposed to be on break. This week is supposed to be break, but I decided to go to Asia, one-way ticket, go there. I don't know what I'm gonna do, just hang out for a little bit, just to hang out, just whatever. Take a break, okay? So I'm gonna do week 5 and week 6 this week. We looked at week 7 is divergence, hidden, exaggerated, regular. Okay, so I already talked about that subject before in week 4. So what I might do here is if we go through the volume analysis work today and I feel comfortable with the material, I will teach time frame analysis. So week 8 tomorrow. Okay. So we're actually compressing the subject material together here so that when I'm away, you guys don't feel like, okay, Super's not here, he's not teaching anymore. No, we'll go through the material in depth still so that you know you get all the material, and then we'll do the time frame analysis tomorrow if we have time. And when I come back, we'll do level 2, tape reading, position sizing, and candlestick. But if I'm not back in time, I'll ask TJ doesn't know this, to teach position sizing and risk management in week 9. Okay, you guys writing this down? Are you guys remembering this? Actually, you guys could just go back, right? So week 9 will be position sizing and then level 2. Okay, so hopefully I'll be back by then. All right, so that's the schedule. Okay, let's talk about the mission and vision statement really quick again. Okay, let's read over that, and it's important because we're building a culture. We're building a culture at United Traders. Okay, so the vision of United Trading Capital is to deliver the highest quality of care and the superior returns across all disciplines of the capital markets in a diligent and prudent manner to inspire the next generation of professional investors. And we've mentioned this before in the past. Quality of care means fiduciary care. We have a responsibility to the capital markets, to the stock market, to the professional, the financial, the investment profession. Okay, and we're going to try to deliver superior returns. Okay, all disciplines, meaning we're doing options, we're doing equities. I don't think we're doing bonds though right now. We're not doing bonds yet, but we'll find somebody that is an expert in the debt market, also known as the bond market, or okay. So in a diligent manner, okay? So the mission of the United Trading Capital is to become the world's leading network for institutional and proprietary trading through mentorship with the lifetime goal of independent wealth and continuous pursuit of philanthropy. So you've noticed, I think, was it last week? Was it last week? TJ connected with Joseph, right? Which is a future lawyer. We've joined groups together, so that's part of the leading network, right? And you saw I'm reaching out to Adam Koo. Okay, so Adam Koo, I'm communicating with Adam Koo to bring him in as just a 1 hour presentation. Remember, his time is very valuable. If you read his Wikipedia, I think he does over 120 presentations a year. Over 80,000 people attend his presentations every year. He's the youngest millionaire in Singapore ever at the age of 26. Okay, in trading and in teaching. Okay, and we all know who Adam Koo is. So that's part of our dedication to our mission and vision statement, and the continuous pursuit of philanthropy. It's all free, right? It's all free. Okay. So before I go into the volume analysis stuff, I do want to review really quickly. Not so much the code of conduct, but in an event that happened yesterday. And I just wanted to make this clear. It happened after trading hours. Oops. Okay, so let's look at this together, the code of conduct. So this person joined, okay, he's at level 2, so he didn't join hasn't been here long enough. But look what he's saying. You're a loser though, code of conduct, my balls. I said banned. Not because he called Ace of Trades a loser. It's because you've made fun of the code of conduct. Okay, that is terms for dismissal on the spot in this room if I see it. I mean, if TJ sees it or somebody else, but on my terms, that is terms for dismissal. You don't respect the code of conduct. You don't respect the spirit of United Traders. You don't respect what we're here to do, what we're here to, why we were formed. You don't respect us. And then the truth is you don't respect me because I wrote the code of conduct. Okay? So that's that. So that's just why this person is banned, just for this reason alone, nothing else. For these sentences here, you write that, you will get banned if I see it. Okay. Okay. So that's the housekeeping stuff. Okay, TJ and Vegas, do you have any housekeeping stuff here to talk about really quick at this point?
No, you're doing great. Continue.
Okay. All right. So the volume analysis stuff. Volume analysis. Okay, so I'm going to put, you've heard me say this, volume price analysis is the phrase that Anna Cooling uses, right? However, all the technical traders, and if they go to school, I think they learn this, volume spread analysis, right? It's good to know. Volume spread, the spread is from the spread of the candles, the range of the candles, the length of the candles, right? If the candle is long, we can say that the candle has a long range or a long spread. So together, volume price analysis is equal to the volume spread analysis, right? Spread is the candlestick. So volume validation of the candlestick, volume validation of the spread of the candles, okay? This is important to know the word spread of the candles, because it goes into the topic of anomalies. Okay, so here's the question right here, right now. Oh, you guys don't have, you guys can't reply, right? But who's not familiar with the word anomaly? Right? Can you do the check? Who's not familiar with it? Here, give me a check mark. Whoever, if you're not familiar with it, exactly. If you did your homework, you know what anomalies are, okay? Anomalies are, okay? So that's important. So I will go through that. It's actually very confusing. But once you picked up the anomaly part, you will understand, okay? Okay, so I'm just gonna right now go through, I'm gonna go through the book really quick, okay? Just to highlight some of the key points. You guys have read the book, okay? So the book comes from, I'm not gonna teach the textbook, I'm a practical guy, okay? Okay, so let's hear. So in the section, she talks talks about these three basic laws. Remember, her volume analysis theory, accumulation, distribution, mark up, mark down, all comes from Richard Wyckoff, right? Richard Wyckoff came up with this theory that the markets work in cycles, right? Dominated and ran by institutional money, also known as the market makers, right? These guys have all the money. When they buy, everyone else buys. When they dump, everyone else dumps, right? So Richard Wyckoff came up with these three laws: supply and demand, cause and effect, effort and result. Okay, notice how the paragraphs are broken down. The law of effort and result here, okay, is more important than the other two. Okay, so I'm going to focus on this section, right? The law of effort and result. Basically, when we summarize what he's saying here, basically, if the move, basically in a nutshell, if the stock moves 100%, the result is 100%. The effort has to be there to substantiate it, to validate it. This is where the idea of volume must validate price action. This is where the rule comes from, right? Remember, let me say this again. If the result is 100% move, the effort has to be there. There has to be enough buyers to push up the result, push up the price. Okay, so that's important. If the price moves 100%, but the volume is only 5, what do you guys think? No validation, right? Move is fake. What happens? Tank. Okay. Actually, sorry. Okay, so that's just the rules. Okay. Actually, let me go through it. I didn't teach this last time. I want to teach it this time. 1 sec. Sorry, taking a step back again. Okay, I'm just pulling up a ticker here. This is from Yahoo. Okay, so when you do your volume analysis, you want to go to this screen here. This is important. This is what I learned. Okay, so go to the screen like here. This is like this ticker is called CGI. Okay, let's go through this top bottom on the right there. The share statistics. The average volume 3 months. Okay, the average 3-month volume. Okay, that's important for what? The daily, right? When you're looking at a daily chart, you want to know what the average volume per day is, or per the last 3 months. Like this will help you. Okay, average volume for the last 10 days. Just by looking at this ticker, the average volume for the last 10 days is actually getting close to the 3-month volume. Volume is coming in, okay, to this ticker. Shares outstanding, the float, institutional, held by insiders, held by institutions, share short, right? All those gives you the what? The volatility. The float is 21 million. It's a small float, right? The average volume is only 300,000. So if all of a sudden you go to this ticker and the next day you see it trading at 700,000 shares, 800,000 shares, it's trading more than the average, the 10-day volume, right? It's trading more than a 3-month average. That means what? A lot of interest. Something is going on here. Something bananas is happening, right? This is the type of research just by looking at this. Okay, so if we go to CGI, so let's just finish the example. This is the type of volume stuff that you have to sort of look at. CGI. So we'll go to, okay. I actually don't know. I just randomly put this ticker in. It says CGI, right? CGI movies and stuff. Okay. So look at, this is a market watch. Look at this. So market watch, okay? The average volume today is 444,000 shares. Look at to the right of it. The 65-day average is 405,000. Okay, something's happening here. There's more volume coming through today than it did the last 10 days than it did the last 3 months on average, right? If we look up, we did the due diligence, something must be happening. How come people are just buying volume here? How come people are buying, right? That's part of the research. People are always looking for a catalyst. People are always looking for the 8K filing, the 8Q filing. Well, the truth is for me, and I'll say this again, I don't care what the catalyst is. I can see it in the volume. If the average volume is only 100,000 shares, and all of a sudden today I see 200,000 shares, the next day I see 300,000 shares, well, something is happening that I don't know about, right? Is that okay? So that's a tool that you guys will use. This is a tool, the Yahoo. Look at those statistics and the Selden group. Actually, just let's just pull up this chart. Maybe something is up really quick. I know it's like impromptu. Okay, let's just pull up this chart. It looks like, okay, so I'm gonna pull up the chart, but let me put in my support and resistance first. Here's my support line. Okay. Just have to draw one line. So we just do the research. Okay, we pull up the chart. Okay, here's the chart. CGI, there's a support line right across. Do you guys, you guys agree, right? This line touches, the price action touches this line multiple times throughout its history. Over the last year, it touched this line 1, 2, 3, 4, 5 times. It's nearing this line again, okay? It's nearing this line again, okay? Okay, look, let's really closely look at this. Every time it touches this line, what happens? What do you guys think? Something's about to happen here? Right? Every time it touches this line, something's about to happen. It's coming near this line. People are they're noticing that and they're getting into position. Okay? So we don't know I've never seen this stuff before. I don't know what's up. Maybe there's news or maybe they want to do something crazy, but people are noticing it and they're taking position. We can see it in the volume, right? There's interest. Okay. So
what ticker are you talking about? What ticker are you talking about?
Oh yeah, sorry, CGI.
CGI?
Yeah. Okay, so those are the tools. That's the first way to do. That's just your technical breakdown. Okay. So now I'll go back into the book. Okay, I took a big detour there just to teach you how Yahoo and Market Watch what I look for. Okay, so I talked about the law of effort and result, right? That's really important there. Okay, and then she goes into the tape, right? That section, I'll just for the sake of completion here. She goes into the tape, right? She goes into tape reading because all the volume and all the transactions show up on the tape. So tape reading will come later. I'm not going to focus on it. On the tape, you could read the buying pressure. You could read the selling pressure, right? Let me write that. You could read the buying pressure. You could read the selling pressure, right? You could read the volume coming through, right? You could read the interest, the amount of interest, right? You could read that all in the tape. You could read the emotions, right? People are panic selling, right? People are panic buying. FOMO, all this, people are regretful, right? You could read this on the tape. You could see it in the volume. This is why this book is so intuitive. Okay. Okay, so she goes into why volume. There's an important. Okay, I want to highlight this part. Just so you know, right here, right now, volume is important. It is. Volume precedes price, but look at what she writes here. It is not perfect. Nothing is in trading. We're only taking a guess, and volume is only a proxy. Okay? And we learned that from the Mark Douglas readings. Okay. So I just wanted to highlight some of these key points. Okay, here are the 3 key points that you guys read, but you guys didn't remember, and I will teach you today. Okay. Okay, let's go here. Really quick here. Volume is relative. What does volume is relative mean? It took me a while to understand what volume is relative means as well. Okay. What it means is each chart is different. Each chart has a different average volume. Okay, some will have a 10K, some will have 100K, some will have 100 million. Average volume. Average volume is critical. Why? Shows up in the book later. Remember that? Who remembers where that's from? I'm jumping around this book a little, but don't worry, I'll flow through it. You guys missed this? Average volume. Okay, you guys have to remember this and write this down in your notebooks, okay? Look at this. The validation, write this down. The validation of volume. The price action in itself can only be validated if the volume is above average volume. So the average volume is 200,000 shares. Okay. Here's the example. Here's the example. The average volume is 200,000 shares. Today the stock moved 100%, but only 20,000 shares came in. 20,000 shares. What's going to happen tomorrow? It's going to tank. Why? The volume never validated price, right? If the average, okay, you guys understand that, right? That's critical. If you guys don't understand how volume validates price, it usually has to go above the average volume. If it's too low, price is not validated. If it's really high, great. There might be some continuation. All right? That's critical here. This is examples of volume validation. Look at her wording. Widespread body of the candle. This is a long range candle. It moved up 100%. High volume. Yes, this was validated. Critical. If you don't understand this, you won't understand volume analysis. This is a critical part of the book, okay? The second point in that little chart book that I pulled up, volume without price is meaningless, okay? So basically, volume precedes price, volume validates price action. You can look at the volume, but if you don't see the price action, or if you look at the price action without the volume, it means nothing, okay? Okay. What does she mean by that? Okay, so she said time is a key component of volume. I think, because she doesn't really give a big example there, but I think volume, just like the CGI example, how come there's volume coming through near the end here and we looked it up? Well, it's nearing support. It's nearing that level again where people are starting to buy again. Okay, so that's probably the time thing that she's talking about. I never understood why she wrote that. So if you figure it out, you tell me. Okay, so that's that. And then, so I'm going to go through just the key points of here. Okay, so rising price, multiple candles. Yes, you read that. Okay, so you read that, and then now we're going to go through the anomalies really quick. But before I want to go through the anomalies, I will go to the accumulation part of this, which is chapter 5. Okay, so this is the chance where I'm going to teach accumulation. So here's the accumulation, right? And I will show you the accumulation phase, and I'll teach you what to look for from the book, from the examples. Okay. Okay, here it is. Just this is the accumulation phase. I'm going to draw supported resistance. Okay. Okay, here it is. Accumulation, right? Take a look at the picture. Like, who cares if this is candlesticks or not? It doesn't matter. This is part of the Wyckoff method, right? This stock is tanking. It consolidates, right? Critical that you guys. This shows up in the book. This area right here. Okay, I'm gonna circle this. This area shows up in the book, right? This area here. How does she know that the buyers have stepped in? Right? Okay, I'm gonna scroll to that part. So you guys might not understand completely what I'm saying, but if I highlight it and you guys go back to the book and you guys read it, You guys will be like, okay, I get that. I missed that part. Now I understand it. Okay. What the? Okay, it shows up here. Here, look at that part, that circle here. Okay, lower low, then candles are. Okay, shit, I'm gonna lose you guys here. One sec, okay, wait, I need to find a better picture, that's why. One sec. Okay, here's the picture again. You guys have to bear with me. Okay, here's a better picture of accumulation. Look at this. Look at this picture. Okay, let's look, and I'm gonna zoom in on this part. Okay, let's zoom in on this part where it bounced. Okay, let's zoom in on this part where it bounced. Look at what's happening here. It's just like that picture that she drew. Okay, look at carefully. Look at the 3 candles that are hitting that blue line. Let's look at carefully what's happening here. Just like that picture she drew. Exactly like that picture. I found these on the internet, by the way. You know why it happens this way? Why does it happen this way? Because selling pressure, right? Selling pressure, attacks. It hits the blue line, it hits the support line, and then it bounces off. There's that blue candle just in her picture. It bounces off just like that, just like accumulation. And that, in the book, she says, this is the beginning of buyers stepping in. Are we seeing this now? Are we getting this now? Sorry, so the first picture was confusing as hell, I get that. But now are we seeing? Buyers are stepping in. Are buyers not stepping in here? Buyers are stepping in. She writes that in her book. This is the first indication of accumulation. Okay? This is the first indication. Okay? So then it trades sideways. Again, buyers are stepping in. Okay. This is how we know. Okay, so look from this example. It bounces off support again. Buyers are stepping in to buy at support. Buyers are stepping in to buy at support, right? Okay, so then let's look at the accumulation picture. All right. Okay, so here it is. Okay, now book. Okay, so I'm gonna make this clear now. Okay, so accumulation. This is important. When a stock is tanking, right? Stock tanking. Okay, let's look at here. Sorry, let's take a step back here because you guys need to know what's happening here. Okay, on this picture, we can knife catch here. We could try. Okay, look at this picture. When the stock, this happens every day. A stock is tanking, and a bunch of us are trying to knife catch in that area, right? We're knife catching that, right? We're catching the bounce. We're knife catching it. Okay, we're scalping that, right? We're scalping that area for 20 cents. But you will notice when it starts to tank, the selling pressure starts to increase, and then it starts to eventually fade away because the selling pressure has to the number of people in the stock market ready to run shares to sell, right? Eventually, the buyers step in. The smart money comes in, correct? Right? We see accumulators are stepping in now, right? So what I'm trying to say is we knife catch it all the way down, but then we have to realize eventually it must go to accumulation. It must start to accumulate. Are we getting that part here? It must start to accumulate there, okay? This accumulation part is very, very, very important here. Now I'm going to go through a picture, okay? So now we see it bounce, okay? Buyers are stepping in is where the blue is, right? Right at support, okay? So let's write this down. Okay, look, so isn't this what's happening here? When the thing tanks, we're knife catching it all the way down, but eventually when it tanks, what happens? It must accumulate. It must accumulate. This is written in her book. The cycle, the Richard Wyckoff cycle, it must accumulate. The market makers must come back to the market to buy all the shares. They must accumulate at all those areas. See all those blue in that picture? They are buying shares there. They're showing volume. Yeah. That's why there's high volume there. They're buying it there. Okay? This accumulation is important. Okay, let's go back. And okay. So here's something that you guys have to remember intuitively. Okay, I'm going to put R and S. Okay, I'm going to write, resistance, right? Price is being held down. Price is being held down here, right? Why does price being held down? Market maker must, right? If people dump shares, market maker buys all the shares. Somebody retail buys in congestion, they must dump the shares. Goldman Sachs will buy all the shares. So that's where they must accumulate as support. So here's the question. Support. Can it break in accumulation? Yes or no? Can it break in accumulation? No. Why? Because if Goldman Sachs, a big major player in the market, goes, guys, I'm accumulating ATOS at 90 cents, and now I have a $100 million position at 90 cents. Do you think Goldman Sachs will ever let the price go to 85 cents? No. No, it will never. Okay, do I have to slow down what I just said there? Because that's super important. In accumulation phase, support never breaks. If Goldman Sachs accumulated ATOS, let's say at 90 freaking cents, will it ever let ATOS go to 85 cents? No, it will never. So what does that mean for you? If you noticed accumulation, what happens? If you notice accumulation, what happens? You could buy at support, right? You can buy at support. Can you buy this at support? Yes, you could buy this at support. Why are you doing that? Because you are accumulating now with the market maker. So why are we teaching this? Why is Anna Cooling teaching this? Because Anna Cooling says this happens on every single time frame for every single stock, every single day. This cycle shows up all the freaking time. Shows up all the time. Okay? Okay? So okay. So here's the breakout, right? Over what? The break of resistance. So here's the question that people always ask, right? There's the breakout, okay? Here's a question that people always ask. When do you know the breakout's going to happen? When do you know? Does anybody know? From the book? From the book or from just normal logic? Okay, here's the answer, okay? Okay, so the breakout happens when? It doesn't matter when the breakout happens. Well, actually here, let's take a step back. The breakout is going to happen when the selling pressure starts to fade away, right? Because in this area, remember, in this area, there's a lot of selling pressure still, but the selling pressure, the number of shares being dumped is slowly decreasing. It has to decrease. Psychologically, it has to decrease. How could a stock have 1 billion shares and we've been dumping for 6 months? How can it can't? It can't dump that long. It just fades away. The selling pressure has to fade. Okay? And the buyers start to come back in. Starts to come back. Market maker has accumulated all the shares. How do we know the market maker has accumulated all the shares? Because there is no more buying pressure, right? No, sorry. Oops, selling pressure. Selling pressure. Oops, let's edit that. Who the hell said that? No, there's no more selling pressure. Crap. Okay, stop typing for a second. There is no more selling pressure, okay? And I'll make that apparent in one of the pictures. Okay, so here, let's take a look. This is in her book, okay? She goes bang on. She said, this is about to break out. What happens? She calls this the buying climax. Okay, here's the intuitive part. Let's look. Let's look at this. Those candles, we've learned that before, the first day. Those candles have buying pressure, right? Remember that favorite picture? Do I have to show it again? Like I'm really getting tired of showing this picture because every time I show it, people are like, "What? How do you buying pressure?" Well, look at the candles. Look at the candles. Are you making this up? Is Anna making this up? Am I? No. Look at that candle I'm drawing the arrow to? Is this buying pressure? This is buying pressure. What does buying pressure mean? Buying pressure means buyers are coming back and buying this. They are not letting this go down. When you see, if you said, Superbloom, I just saw accumulation. I think it's being accumulated. It's been accumulating for days. And I start to see this buying pressure. What are you starting to expect now? What are you thinking? Breakout is coming. Is it not? Do you think Anna Cooling wrote this book to trick you? Why is it buying climax? Why is she calling it the buying climax? The question here. Who's buying climax? Who's no longer buying in this area? Who's no longer buying in this area? The market maker. The market maker is no longer buying, right? Because there's nothing else to buy. It has to rip now. It has to go up. So, does that make sense? Accumulation, selling pressure is being dumped and it fades away. Selling pressure, people running out of stuff to sell. They just can't sell anymore. Market maker must buy all the shares. The buying climax. They can no longer buy anymore. If they can't buy any more shares, if they have all the shares in the market, what has to happen? If you have all the shares of Facebook in the stock market, what's the next thing you want to do? What's the next thing you want to do? You want this thing to rip 100% so you could dump. Is that right? Did I lose you guys there? I think I lost you guys there when I said that, because you guys are probably like, if I had 100,000 shares of Facebook and this, now what do I do? Well, okay. So let's redraw. So let's go back to the picture. We talked about the psychology of, right? We talked about the psychology of the market maker. Okay, look at this. In accumulation, you have 100,000 shares of Facebook. You are in the buying climax. You see the buying pressure. You see the volume come back. Buyers are coming back. What happens? This has to rip. This has to only go up. Why? Because there's no more selling pressure left. We concluded there was no more selling pressure left. Is that right? This has to go up. It breaks over what? So that circle there. It breaks over resistance. So does it matter if you spot accumulation? Let me ask you something. If you spot accumulation, this whole entire cycle, you notice that people are buying here, and the market maker is absorbing buyers, absorbing shares. You're absorbing shares. You're buying shares. It has to go up, right? It breaks over resistance. Doesn't matter when. You're just waiting for what? Resistance to break. Is that right? You're just waiting for resistance to break. You don't know if it's today. You don't know if it's tomorrow. You don't know if it's next hour. You don't know if it's 10 minutes. But what happens? Because you don't know the market maker. You don't know Goldman Sachs' phone number. You don't know when they want this to rip. But what do you wait for? You wait. You're like, I know I'm spotting this. I'm waiting now for resistance to break. Resistance is what? When resistance breaks, what happens? An explosion. Why? We studied this. Explosion, why? Shorts need to cover. Fear of missing out. Retail traders chasing. Goldman Sachs is ripping. We're jumping in. Right? Look at this. Goes straight up. Straight up. Right? Did I lose you there? Somebody give me those check marks. I don't know. That's really important what I just said there. Okay? If somebody has to ask me, why is support never broken? Or, okay, so I want to know just if I lost you there. That's really important and critical. Okay. So let's go back to this picture just to make sure I didn't lose you, and I have you here. Okay. Right? This is what. Let's go back to this picture. So when you read that book, Paula, did you understand? You missed me there? Okay, wait. Is Paula misunderstand? Did I confuse you there? Okay, first of all, this picture here. Remember, in accumulation, this blue line that I'm drawing across is what? Support. It is support, right? It bounces off support with volume going up. See that blue candle? That is buyers jumping in. See that red candle bouncing off support? Those are buyers. That's the market maker. They're buying there. They are just like that picture. This is the first indication. If you're like, let's go back and figure out what accumulation looks like. Well, if you look for a similar pattern like this, showing that buyers are stepping in, then you know. Okay? Wait, okay, Paula, what's your question at this point? Because if Paula doesn't understand, she's been trading this for a while. If she doesn't understand, I might have lost you guys somewhere. Let's see a chart here. Let's see this chart.
Question.
Okay, let's see. Okay, everyone's understood. It's got to be clear there because it's got to be clear. The psychology of this market, it goes down, it tanks, it consolidates in accumulation for a while, right? It consolidates for a while. Market makers accumulating all the shares, and then it hits and buying climax, right? Buying pressure, a lot of volume coming in, no more selling pressure. This rips. This goes rip straight up. I'm looking for a chart. Let's see. I'm looking for a chart. What's a chart that?
Hey, Superbloom, I got one if you want to look at it.
Wait.
ADXS.
Wait. No, that's okay. Okay, no more. No tickers right now. Don't show me any tickers. I want to go through, make sure. Buying climax. One sec. Don't show the tickers because we could. Every ticker is going to show something, right? Okay. I want to make sure we have all the material. I'm covering down all the material. Okay, so. Okay, so here's what I said earlier. Plains accumulation, support never breaks. Support never breaks in accumulation. Stock is trading sideways. Okay, that's the key thing. The support level never breaks. Support level never breaks because the market maker will never let this stock go down past where it bought, okay? That's critical. I mean, if anything, you're never going to remember anything confusing. And how do I know? I will pull up a chart at the end just to prove it to you that this happens in every cycle. Unless okay, wow. Okay, don't. Oh. One sec, don't click anything. Why does it do that? Okay, let's talk about this really quick here. Okay, actually fine. Here, what are the questions for accumulation at this point? And then we're going to go to this. So what's the question here what's the confusing part of it you guys didn't understand? While you guys ask me the question, I'm going to pull up a chart, okay? NXTD. Did it rip today? No. Okay, any questions at this point for the that you guys are thought I had. Okay, bear with me.
We can save questions for the end.
Okay, so here, okay, here, okay, this is an example I've had. Okay, here's an example I'm going to use. This is a while ago. Okay, this is a real example. Okay, so I have the example here now. Great. Okay, let's look at this together. This is a real chart in accumulation. What am I drawing here? Support and resistance, right? Right? Just so you know, this comes after a period of what? Rapid selling pressure, right? Okay, here's, oh my God, my mouse. Okay, look, buyers, right? Hitting resistance, right? Price is being held down and volume starts to, okay? Can you guys spot this? Tell me that after this lesson, that you could spot the accumulation in the 1 hour time frame or the daily time frame or the 30-minute time frame or the 5-minute time frame, right? Even because stocks can consolidate for 5 minutes. Remember, even for 2 minutes, it can do accumulation, right? The market maker doesn't have to wait for you. The market maker will accumulate 10,000 shares and then let this rip because nothing's happening. Nope. Okay, remember. Okay, so this might be confusing for you. Okay, I'm going to say this slowly. In the book, Anna Cooling says the accumulation phase can happen in any time frame. How is that possible? Because when the stock is tanking, as soon as the market maker starts to buy the shares and notices that for the next 20 minutes nobody's dumping, he's realized one thing. The selling pressure is gone. He's willing for this to go back up again. Okay? Is that clear? So in 20 minutes, if nobody's dumping shares, that's why I always sell. Okay, that's why I'm going to go to the trading floor. I always say this. I'm going to search it up right now. There's no selling pressure. No, wait. Okay, so look at this. So I'm going to go back to Bloom Place. This is just the point. Okay, so look at this picture. I said selling pressure is fading. Okay, look at what happens here. Look at that big volume spike in the middle. Okay, this is all volume analysis, but this is not even volume analysis. This is really just reading what the market maker wants to do. See that blue arrow there? Look at that blue arrow there. What's happening? He buys all the shares there. Look what to the right of it. To the right of this to the right of that green bar that I pointed out. The selling pressure to the next one is really low. He's noticing what? The selling pressure is decreasing, right? And then he buys it again. And then he lets this thing rip. This time frame was what? 5 minutes. He was accumulating here. As soon as he realizes that there's no more selling pressure, this has to go up. Is that important here? Okay, I'm gonna write this. As soon as you notice selling pressure is gone, the stock must go up. Is that okay, does it have to go up for sure? It goes up, but it could break down, right? Because the hedge fund on the other end could dump it later. We don't know that, but we could assume that right now the selling pressure, if it's gone, how can anyone push it down? So this has to eventually go up. I put it in the notes. This thing ended up moving up, right? This was an IPO. All right. This is something you guys have to notice. Okay. So let's look at that chart again. Okay. Let's go look at the volume again here. This is not the volume analysis study. Okay. Look at the selling pressure. This is the anomaly. Okay. We're going to talk about the anomaly really quick. What is an anomaly? From the book, it is when big volume, small candle, right? That's one. And number two is small volume, big candle. Can we think this is almost kind of like divergence? If big volume comes in, just like this picture here, look at this picture. Big volume came in. Compare that volume bar to the rest of it on the left and right. Is there something wrong here? Are you guys seeing this? Who's seeing this? Big volume coming in, right? But the candle range is small. There's what's happening. There's a lot of this is the trickiest part of the book, and I have to explain this maybe one or two times. There's actually a lot of buying pressure there because why? Support is being held. Support is being held there. So much selling pressure came through, but support never broke. Support never breaks in accumulation. This must be accumulation. This must be the anomaly that shows up and that proves it to her, right? There's a lot of buyers here. You might think there's a lot of selling pressure. Yes, there's a lot of selling pressure, but there's a reason why that selling pressure didn't break support. Why? Because what's the reason behind that? Because there's a lot of buyers coming in, correct? What happens to the right of it eventually? Buyers start to come in. Look at the green bar. Look at the volume behind it. Look at the green. Look at the volume. You could read the psychology behind the volume here. Look at what happens after. The selling pressure is fading now. Buyers are stepping back. Are the buyers not coming in? Look how many red bars there are. None. There's no more red. There's no selling pressure. Is gone. This has to go up. Stock goes straight up. Right? Do we get this now? Does everyone understand how this works? This volume analysis stuff. Okay. So that's critical. Okay. Maybe that's good that I have a volume analysis class tomorrow because this is a big topic, right? But I covered accumulation. That's the most important part. The volume is relative. Okay, tomorrow we'll go through actually. Does anybody have my? One sec. Let me see if I have another chart. Ooh, here's my volume rules, by the way. Found it. Let's go over this tomorrow. Here are the volume rules. I basically copied it from the book. Okay, volume is relative. Volume is not perfect. Okay. Okay, actually, you know what? Okay, so because we have a volume class tomorrow, but let's go over a chart today. Okay. Let's go over a chart today and read the volume. Okay, let's just read the volume for fun first. This is on the daily time frame. Okay, this is on the daily. We're going to read the volume. Okay, what happens here? Let's just read it together. The logic, just common sense logic here. What's happening? Trading sideways. Is this trading sideways? This is trading sideways for a little bit. Some congestion. Buyers are stepping in, sellers are selling. Buyers are stepping in, sellers are selling. And then all of a sudden, buyers. Right? All of a sudden, buyers. Is that right? Is that right? Okay. That's right, isn't it? Right? So here's the chart. Right? There it is. Right? Sideways trading. You could read it in the volume. Sideways is trading, blah, blah, blah. Okay, it doesn't. But what's important here that you need to notice? As soon as you see buyers stepping in, look, I'm going to circle this once. This is congestion. This is accumulation, isn't it? Oops. This is accumulation. Look, first phase, accumulation. Isn't this some sort of accumulation here? Right? Support is not being broken. That EMA is not being broken. Is that right? EMA is not being broken. Okay, EMA is not being broken. Right? Something is holding it up. Right. Buyers are stepping in. If you notice buyers are stepping in, what are you doing? You're the increase in buying power. Right? You're now rapidly buying with it. Look at this volume come in. Is this not the Richard Wyckoff method in some form or another? Or do I need to draw you the picture here? Look at this. Is this not the Richard Wyckoff method? Is this not accumulation and then markup and it consolidates, blue line and it consolidates? Isn't that how this is working? This is working. The market maker accumulates all the freaking shares and it has to go up. And I'll tell you the logic here too. This is the ETF for the marijuana sector. It's probably the only chart I'm looking at. Okay. This is Doji here. Doji, look at this Doji. Can we classify this Doji as an anomaly here? Something weird's happening. This is ripping. All of a sudden, a Doji is showing up in the middle of this chart. Possible reversal, ton of volume, right? Actually, no. Right? And it still continues to move up. The selling pressure came through, but what? It didn't break down. There's a logic there. You see what's happening here? Because I'm segueing into something, the last lesson of this course, the validated dojis. Okay, let's study this doji again. Let's look closely. I'm gonna draw the same picture. This selling pressure is coming through, but the support never breaks. It's showing a reversal, but it's not. It's validated with volume. There should have been a reversal. Right, next day, volume comes through. Actually, how can I explain that? Actually, I can't explain that. There should have been a reversal there, technically by charting, but it kept ripping. Okay, forget that I said anything there. Forget that I said that part. Yeah, forget that I said that doji part. Technically, if you see a doji with that much volume, this thing should have been reversing. Okay, and the reason, because this is the same idea as this, I'm gonna do it in green. So here's something that, maybe it's a lesson. See on the left there, we see that big doji with that ton of volume come through, right? Theoretically, hypothetically speaking, we would be anticipating a reversal, just like on that green one. Look at that volume on that doji. Look at that volume come through there, and then it tanked. Okay, so maybe the lesson for this is notice that when you see a doji, it doesn't necessarily mean a reversal might be coming, right? So there's no magic to this. So you have to be patient and watch it. But theoretically, if you see a doji with that much volume, technically from the book, there should be a reversal. But as you see on the left, there was no reversal. Continuation. On the second doji, then you see a tank coming down, right? And then you see so here's the doji, and then what? Selling pressure come back, right? Selling pressure come back, and then buyers are coming back. You see buyers coming back, the reversal. Okay, there's the reversal. You could read this in the chart. There's the reversal. Buyers are coming back. Sellers are coming back. Buyers are coming back. Sellers are coming back. Buyers are coming back. Is that right? I'm pointing out these examples and teaching you the logic that I read when I do my analysis. I read the volume. I read the sentiment. I read for buying pressure and selling pressure. Right? Just the logic. Okay, so before I let you guys go, and we will continue this tomorrow, and I will review what I said to you and come up with some more clarity, because maybe I confused you even more today. 1 second here. So let's talk about the dojis here. This is why the dojis are important. Notice how I'm teaching you the candlesticks one by one. Here it is. Yeah. Okay, let me explain that again. Okay. Let me explain to this doji here. Let's just focus on this doji, because this doji did what it's supposed to. This is what we call a validated doji. Okay? This doji came in with that much selling pressure and that much buyers. There was a big battle here. Tons of buyers and tons of sellers came in to fight for the stock to go up or down. It doesn't, but eventually the selling pressure won and it tanked, right? We know because the doji at the top, right? The doji at the top of its range, right, is this. Right? This is this doji right here. Okay, look at this. This is this doji right here, isn't it? That doji is this doji that I wrote in my book, in my posting. Doji with high volume, right? Super high volume, okay? That one is doji with high, right? So if you go to the book, that the reference that I use, reversal is confirmed. We know a reversal is coming. right? We know a reversal is coming. Does that help? Does that help clear up? Okay. Okay, so let's okay, maybe there is a reason why this thing. Let me see here. 1, 3, 5, 4. Okay, okay, let me look at this here. Maybe there is a reason why it never. Okay, I'm gonna look it up. No, okay. Okay, just okay. Does that help? Does that clear it up? Okay. So sometimes you will see a volume. Sometimes you will see this. Okay, low volume dojis. You will see low volume dojis. Dojis at the bottom, and dojis at the top with low volume. Right? These are not validated. There's not enough buyers for the one on the left, the low volume doji at support. There's not enough buyers. This thing will continue to tank. Right? Let's see. Right? I put that in the notes. Downtrend with low volume. You must wait for entry. This thing, there's not enough buyers there. That volume doji showed up. SLTB. Okay, there. Here's the perfect example. SLTB. I never held this ticker overnight. Look at this. I didn't hold this ticker overnight. See that? See, I bought and traded there that day. Remember, I kept on SLTB. Look at that volume there. Look at that. See, because remember, what I was seeing on my chart was this. Okay, look, this is important here. Look at this. Here, why didn't I hold this ticker overnight? Look at the volume there. Only 5 people showed up to this party. 5 people. Me and 4 other people traded this. This thing went almost like $2 or $3 a share. I am not holding this. What happens the next day? This is not validated. This is not a hammer that's validated with volume, right? Right? This is not validated. There's no reversal coming. What happens? I didn't hold it overnight. Was I right or was I wrong? Where did this stock go? It went to 1920. Like, why would I hold this overnight? It was not validated by. If 10 million shares came through that day, validated by volume, the candlestick, the doji was validated, then maybe there was a reversal. But I didn't think that a reversal was coming. Did I lose you there now? Did I lose anyone there when I'm talking about this low volume? Pretend it's like a low volume hammer even. Okay? I didn't lose you there, did I? It's clear. So I sold my position and I'm waiting now. I must confirm because the volume was too low. Is that right? The volume was too low. The volume was too low. Why would I gamble? That's why, guys, if the float is 10 million, today 100 million shares went through, God, this move has to continue. There's too much shares. There's too much traders. There's too much volume. Okay? So that's a good example. Finally, a good example. Okay? Okay, let's just look at here tomorrow. Is there a continuation here tomorrow for SLDB? Look at the volume that came through. Just relatively speaking, volume is relative. Relatively speaking, do you think volume? I think tomorrow a big red day? Right, not enough volume. This thing went what? This thing went from $22 to $27, right? Today. Let's draw the lines here. Okay, it went the full range here. It went full range, but how much volume came through? Not a lot. Not a lot. Is this gonna dump tomorrow? More likely than not, it will go red tomorrow. Okay? Right? If this was more volume, then more people, right? Remember? Effort versus result. Guys get that idea now? Guys get that idea now? It's good, right? Okay. What other dojis? The low volume doji and high volume, right? Let's just go through that. right? High volume doji validated. We can say that a reversal possible coming. Okay, what's another chart here? I haven't really looked at any charts really lately. Let me see. Okay, here it is. Here's a good chart. I really could be using Anna-Coolings. Okay, so this is BTH because I've been looking at that. Look at this. Okay, let's look at this. Look at this. Do we see what's going on here on the left? What's happening? All of a sudden, the ticker went up. Like on that day where there was a green bar there, that ticker doubled what it did the day before. It doubled. The movement, the price action doubled. But was the volume enough? Was the volume enough? Yes or no? No, right? No, not enough volume there to make that true reversal. Look at that volume there. Not enough buyers came in to push that stock up that high. So what happens? It tanks. Is that right? Is that right? You guys seeing the logic though? Who's seeing the logic? Okay. You guys are seeing the logic. Okay, let's do it again. This is fun. This chart is fun. What the? Okay, look at here. Look at here. Is this tweezer top reversal? Right? These are tweezer tops, right? You guys know this pattern, right? Okay, let me look it up really quick. Right? So you guys know. These are tweezer tops. Right, here's the picture. You guys, this is an easy pattern. Okay, look. These are tweezer tops, correct? Look, tweezer top reversal patterns, right? Look at that picture. Look at how much volume came in to validate that candle. Was it validated? Important. Was this move validated? Yes. Look at how much volume came through. Yes. And what happens next? The move is confirmed, tanks. Right? Okay, without even looking. Now this is a test of technical analysis, right? BTH. This is what happened to BTH today. The move. Did we see this move earlier in this chart? Yes, we did. Is this move validated? Yes or no? Is this move validated? Did it move 24% today? Were there enough buyers to move this 24%? No. Right? This is going what? Down. Right? Tomorrow it is going to retrace a little bit. Right? It has to retrace. There's just not enough buyers. Okay? However, if news comes out tomorrow and this thing rips, don't blame me. This thing's ripping. I have a position. Okay? But that's validated. Okay? So let's take a look. These are validated. These are all Anna-Coolings examples, right? Tweezer top, tweezer bottom. Okay? There it is. There's the validation of volume. Okay? Okay, so let's just summarize here. Okay, notice the couples, the three couples at the bottom. Okay, so and then I'm gonna talk about the absorption. This is selling pressure 1, selling pressure 1, selling pressure 1. Right? So between the two volume bars, which one? Selling pressure, selling pressure, selling pressure. What happens next? It tanked, it tanked, it tanked. Is that right? So does that rule kind of work here? Volume precedes price? Is that right? Are you guys like, wow, oh my God, no, I can't say that online, okay. But wow, is that right? Does volume precede price in some level of form here? Now why that book is important? I will continue tomorrow. Because this is a big topic. I really want you to understand the psychology here. Look at this. This is BTH on the 15-minute time frame, okay? Look at this. This is 15 minutes. Look at this 15-minute time frame. Look at that selling pressure come in. This is selling pressure coming in, right? Like maybe, yeah. Okay, let's look. Let's just look at it here. Just so you guys don't walk away and be like, oh my God, I can do everything I want. No, let's just look at this chart from at this point. Selling pressure started to come through. Selling pressure started to come in, okay? You have a position, you're long. Is it okay to take off some profit? Make some money there, just in case this is the beginning of selling pressure, just in case. Yeah, it's possible. Yeah, for sure. This is trading. We don't know what's happening. And then what happens? Look at here. Yes, buyers kept keeping it up, but it was indeed a first sign of weakness. Right? Is that clear what I'm saying? We're not here to predict markets, but if selling pressure starts to come through, we might have to say, oh wow, people are starting to dump here. Maybe I should sell some. I can hold it, right? Vegas would hold this forever, right? Weakness is developing, okay? And okay, so just on this chart here, round it up one more time. So I'll focus more on the anomaly part. Okay, look at this candle and look at this. Is this an anomaly? Tell me the truth. Is this candle an anomaly on the 15-minute chart? Is it an anomaly from Anna Cooling's book? This is what? High spread, right? Big move, low volume. Now what? Now what are we doing? Now we're adding it all up. Are we not adding this all up? We're saying first sign of weakness, then some sort of a weird doji, then an anomaly, then what? Look at this. First sign of weakness, some volatility on that candle, wide range, some spread, right? And then it reaches the top with low volume, anomaly. These are all indicators of weakness. This thing tanks. Tomorrow, we looked at the daily chart. Trust me on this. I have a heavy position in this. I don't want this to tank tomorrow, but I am holding onto the seat of my pants because it's tanking tomorrow, most likely, right? I hope not, but most likely it will, right? So do you guys understand the logic now? Will it help you with the books? You guys can talk now. I like that you guys did this, but I don't see no one responds to me, so I don't know if people understand it. Okay, so this
Question.
What's the question?
When you have the accumulation, distribution, study filter on Thinkorswim and you can see it going up, that's relative to all the price action in general, right?
It's relative to the time frame you're using. Yes, it's relative to the time frame. Like if okay, let's go to HMMJ, the ETF. Yeah, it's relative to the time frame. Okay, and I'm not going to go through time frame analysis now, but you guys, it's relative to the time frame. Yes. Does that answer?
Or the indicators as well. It's not just about an indicator. You gotta spot it. There won't be an indicator that'll give you a clear, defined answer to if this is accumulation or if this is distribution. And 9 times out of 10, accumulation and distribution looks exactly the same. The end result is what will tell us which way it's going to go.
Well, wait 1 sec. Well, distribution is.
Distribution normally happens on the bottom of a chart, right? And then distribution usually happens in the top of the chart, and accumulation on the bottom. But when you're looking at it in a longer time frame,
yes, distribution. Okay, so there it is. There's distribution at the top. I don't go through distribution. It's about shorting, right? It's shorting. It's seeing. Can you guys relate this back to the RSI class that we did last week, or no? Okay, but let's just talk about that really quick here. So are we seeing that this is now what? This is accumulation, isn't it? This is support resistance. And what? Look at this. Look at this picture now. Do you guys understand this now? On the right, is that accumulation? Are we looking at accumulation? That indicator, that RSI indicator is what? Increasing. It can only increase Y when volume is increasing. Is that right? Does that make sense now? If you spot that picture, you're thinking, man, this is going up. Okay, does that answer that question? That exaggerated divergence there. Let me look it up here.
I was just going to make a comment. Look at the buy orders on the ticker tape, and you'll see them start pouring in, and then you know that it's an activated trade.
Okay. Look here. Look at here. Look at here. Look at this. Look at this accumulation here. Look at that divergence there. Look at that volume come in. What I'm trying to point out here is that this ticker goes up, just like the indicator goes up in accumulation. Right? Is this right? Does support break here in this picture? Does support ever break here? No, support never breaks. That is the rule of accumulation, okay? What else? Did I lose anyone? Be honest. I was kind of, I haven't.
Honestly, I think it's a hard subject to talk about. And you're doing your best to cover it, because realistically, when you're looking at real life examples, it's easy to spot when we're trading tickers that are near a 52-week low or near a 52-week high. But realistically, in real world applications, you're going to see a lot of accumulation and distribution throughout the span of a ticker.
Well,
what's important is to notice it in multiple time frames, right? Wouldn't you say that's important?
Yeah. And I will, because I'm going. Okay, so the logic. If I teach you the accumulation phases and how volume validates the move, right? Validates the candles. When you do the time frame analysis, you could piece it all together and come up with a story now. You can look at it in a 1 hour time frame, the 30-minute time frame, the 1 day, the weekly, and put together a thesis and say, guys, I know where this stock is going. It's moving the way I'm thinking and predicting, and I can validate it now. It's going up, validated. It's going up, validated. It's going down, not validated. Something's weird is happening, right? So time frame analysis is next. So you can piece it all together. But for now, you need to be able to spot accumulation, spot the volume, understand the volume validation, and see the anomaly. You guys understand anomaly? Don't worry, there's class 2 tomorrow if you're still confused.
And guys, please read the book. It's so valuable. This is how we spot trades before most of the market even realizes.
Sharky asked me a question. Okay. Sharky, he asked me this question. It's a bearish engulfing. Okay. So that's a good question. He said this pointed out this was a bearish engulfing. You guys know that pattern, right? Bearish engulfing. Okay. Because I want to make this point clear, right? This is a bearish engulfing pattern, correct? So I was wrong in saying it was a tweezer top, but what's important here? What's important here? Calling it the bearish engulfing a tweezer top. Does it matter who calls it what? What matters is the volume. Does the volume validate the move? Volume validates the move, hence the engulfing can move down, right? That's the more important part. Is that fair? More important. Okay. So no more questions about class?
I posted one up higher, Super, about the APVO chart.
Let's not go through the charts. Just let's go to the concepts. Like, did I lose you in accumulation? Did I lose you in anomaly? Because you read the book, right? So I'm just making sure you guys know the anomaly, the rule, the break of resistance, support never breaks. You guys you guys can spot accumulation. You guys can think you can spot it. You guys can think you can spot it. Does accumulation lead to consolidation? So that's okay. So accumulation is actually okay. Look, so here's what people don't realize. Accumulation is the phase in the Richard Wyckoff method. So accumulation is only a very specific term in the Richard Wyckoff method. Accumulation by the market maker, but that entire area, generally speaking, is consolidation. Does that make sense? That entire area is consolidation. This stock is consolidating here. It's forming a base. It's forming a support level. Now we could safely buy and wait for the break. What area is this by Richard Wyckoff? He called it the accumulation phase. Is that clear? Hawkeye? That is confusing, isn't it? They're actually using the same terminology to explain the same thing. Right? Where?
And guys, accumulation distribution is how market makers make money, and they're taking larger sizes. They can't just buy a stock at one time. They will never get their fills at the price that they're looking for, and they'll have so much slippage. So, over time they try and accumulate. But again, in real world applications, just like Bloom said, it's not easy to spot it, and you have to know how to spot it. And there's always two ways to look at it. There's always someone that's accumulating, and there could be another person dumping it on the other end. There's so many players in the game, right? And this is just one aspect that you have to use in your arsenal of tools when you're tackling trades, especially longer time frames.
Okay, here let's do the Apple, the APV chart. Go, okay. Okay, look. Period tanks. Buyers are stepping in. Right? Buyers are stepping in. Support is now being held. Okay. Let's look at this chart together before we go. Right? Is this not this could be the beginning of accumulation. This could be accumulating. This is now accumulating. Looks like accumulation, right? Okay, so this is important. Does this feel like it's accumulating? Who thinks this is accumulation? Who thinks it's consolidating? Okay, you guys could talk. I mean, class is over. We're just going to look through an example, right?
Accumulation.
Right. It's accumulating some. It's accumulating a little bit. So, what are our entries here? Let's just go over that. What's our entry here? Where are we going to want to buy the stock at?
Support.
Where? 330, right? Right. We're going to buy it at 330, 362, right? We're going to buy it there. Let's say we buy at 330, and then what? Do we want to buy it at 350? Who wants to buy this at 350? Or who wants to buy this at 325? Here we go. Here's a good question. Who wants to buy this at 325? Who wants to buy this at 325? Exactly. Don't buy. Why do we not buy this at 3?
It broke support.
It's right in the middle of congestion, right between those green lines, because it could go to 317. It could break down 317. And can it go back over 330, you think? If it broke support at 330, can it go back over 330 that easily? No. Everyone who bought at 330 are now underwater. They are bag holding. So if it goes to 325 and you buy at 320, those bag holders want to break even and they sell. Are you going to be able to go over are you going to buy it at 325 knowing that there's selling pressure at 330? Is that clear what I just said there? That's why discipline knows. Okay, so from this chart, is it accumulating here? Right? Okay, let's look. It's actually a trick question. You couldn't tell by looking at it. This is actually on the 1 hour chart. Okay, so let's zoom in on the 1 hour. Okay. And you have to zoom in closely and study the volume. So let's look at the volume together really quick. Buyers. Okay. Buyers. And some resistance up here, right? We can see it. Look at this chart, guys. Look at the logic. It's so logical. Look at this chart. Look at this. Buyers at support, right? Nobody wants to sell their shares. Look at the area about 330. The selling pressure around 330 is very low. It's actually really low. The selling pressure comes off at 362, right? Near resistance, right? Because so here's the thing. So if we buy at 330 and we wait, great. If it goes to 362, great. If it breaks over resistance, can we add at 365? Can we add at 365? Let's add at 365 resistance, right? Over resistance, correct?
Yeah.
Okay, so we're understanding. Okay, so here's the question last question before it's over. Let's say tomorrow everyone in the chat room buys it at 330 and this tanks. How come it tanked? How come everybody in the chat room bought it at 330 but it tanked? How come?
The institution left.
Exactly. There's somebody on the other end, New York, who says, you know what? I am gonna leave for vacation and dump all 100 million of my shares at 331. Can we predict that move? Can we predict that someone in New York is gonna do that? Can you predict that? Tell me the truth. Can you predict that using analysis? You can't. So accumulation works, yes, in the phases, but is it possible that when we buy it at support, it still tanks? If that hedge fund no longer wants to support the accumulation or the other hedge fund wants to dump, can we predict that? Can we predict it is what I'm trying to say. Can we predict this? We couldn't. But do we have to play the strategy? Do we have to play it by its support? Yes. We're noticing accumulation. If tomorrow I buy this at 332 and it goes to 350, yes, right? I did my analysis. I studied accumulation. This makes sense. I bought it at support and this is going up. Okay, it makes sense. But is it possible that it breaks? Yes, completely possible. All right? I want you to understand that so that you guys don't walk away and say, God, I learned accumulation, but it keeps breaking down. Well, it might not be anything to do with you. It might be everything to do with the hedge fund in New York that's ready to dump their shares.
So when it tests support that last time, it doesn't look like there's much volume there. Is that? I mean, that doesn't seem to go with the accumulation strategy.
No, it looks like it's accumulating here. Okay, I'll tell you why. Accumulating here. Okay, this is clear. Okay, this is selling. Okay, look at this picture. Okay, this is clear. Retail are buying at 362. Retail, they're buying. They're trying to break over resistance here. They want this to rip. Okay, but somebody in New York is dumping their shares at 360, dumping their shares. It goes back down. And then when it goes back down, retail is dumping. Because those people who bought before are actually trying to break even. Those people that bought at 350 are just in the middle of congestion. They're selling. But as it gets to support, buyers are coming back in. This thing is being held up. This thing is actually being held up. As soon as selling pressure fades away here, this can go back up again. Yes, this is a good example. Okay, this is a good look. Look at the picture here on the daily time frame. Okay, look at it all on daily time frame. Buying pressure. Okay, look at it on the daily time frame. This being held up, multiple dojis. Okay. And then let's look at the volume. I'll go through it tomorrow. But there's here. What's going on here? Who can point that out? Support is not being broken, but what? The selling pressure is, they're selling at resistance and they're just slowly fading away. As soon as selling pressure fades away, buyers will step in. Once buyers step in, then we jump in. See what I'm saying here? When we watch this ticker, when buyers jump in, then we jump in. It's not like you're going to wake up tomorrow and buy it at 330. Yeah, you could. Yes, that's a good idea. But if more buyers jump in, then you could also jump in. Right? Is that a good way to explain this? Right? And is it possible, remember, is it possible that this tanks tomorrow? Buy it. Yes. Okay. I'm going to end it there. Tomorrow we'll continue on with the volume stuff. And then at the end of the class, I'll talk about the time frame analysis really quick before I go. Okay, this is a very big topic. Okay, but I hope now that if you go back to the book, you read some of her topics like accumulation, the pivot points, the market maker. She calls it the warehouse. The warehouse is accumulating the shares, right? The warehouse is the market maker, right? Okay, so that's it. So tomorrow we'll continue, and then you guys can talk on the trading floor. So I know I might have confused a little, but you'll figure it out. You'll figure it out, right?
Okay, Superbloom, that was really, really good tonight. Thank you so much for your time. And I think everyone looks for tomorrow.
Yeah, I'm gonna remind me. I'll go detail, give you guys some better examples of the anomaly. Is that because when you spot anomaly, you will see, you will immediately say, okay, weakness is coming or strength. Okay, so we'll go through anomaly tomorrow. Okay, so I'll see you guys tomorrow. Hour and a half. Let's go to the trading floor.
Thank you, Superbloom. Great lesson as always.